Yo, what's up, dough chasers? Tonight we're going to be talking about why bankruptcy won't fix your credit. You may be someone where, you may have been contemplating filing bankruptcy because your credit score sucks and you're looking to make some moves. And tonight I just want to share with you why you should probably rethink that strategy because oftentimes it won't help you when it comes to fixing your credit. And I'm going to break it down for you. We're going to be talking about things that you can include in a bankruptcy, what a bankruptcy will actually do to your credit, some of the restrictions that you have to deal with bankruptcies, and some more fun facts about bankruptcy as well. But really quick, what I want to do is share this on my personal page. So if you can bear with me one quick second. In the meantime, let me know who you are, where you're from, and we're going to get started in the next 15 to 30 seconds. Give me one quick second. Let me know who you are, where you're from. Super excited to share this information with you. Let me get here. All right, share. What's up, Lamar? How you doing, man? Okay. All right, we're live. So let's talk about bankruptcy. When people are looking to file bankruptcy, they want to get rid of the debt on their credit report. And there's a lot of misinformation when it comes to bankruptcy and a report on your credit report. But one thing that I want to share with you straight up is when you file bankruptcy, that does not remove it from the credit report. A lot of people believe that just by filing bankruptcy, the debt will be removed from the credit report. What actually bankruptcy does for you is it's a legal way to remove your obligation from paying the debt. That does not remove it from reporting on your credit report. These are two separate categories, okay? So if you are living a tight financial lifestyle and you're unable to pay your bills, bankruptcy is a tool that will allow you to get rid of the debt so that you don't have to pay it. So you're not legally required to pay the debt. However, the debt still reports on your credit report, okay? It still reflects your payment history, all right? So credit scoring, when you look at how your credit score is made up of, there's 5 components. The first component to your credit score is your payment history. That's 35% of your credit score. Bankruptcies impact that negatively, okay? So if you're looking to use a bankruptcy to fix your credit, it won't help you. It's actually going to hurt you. But before we go into how it hurts you, let's talk about some of the reasons you may look into filing bankruptcy. You may find yourself with a lot of late payments on your student loans, and you want to get rid of those student loans. You may be behind on your child support. You may be behind on your alimony payments. You may be behind on your credit card payments, your mortgage. Whatever the situation may be, these are particular reasons why people are looking to file bankruptcy. But if your credit score is bad and you feel like filing bankruptcy is going to help you remove that off your credit report, that's not what's going to happen, okay? And the thing about bankruptcy is, a few of these items you can't even include in your bankruptcy. Student loans, if they're public student loans, meaning that you got them from the government through FAFSA, okay? Sallie Mae, Navient, all those student loan providers, because they're public student loans, the government, they want their money. So you cannot include a public student loan in your bankruptcy, okay? Child support, you have to pay your child support. You cannot include that in your bankruptcy. And alimony, you cannot include that in your bankruptcy, okay? Now, other debts you can, you may be able to include in your bankruptcy, but those particular debts, no, it's not going to happen. They're going to still, you're still obligated to paying those debts regardless of how tight your situation is because the government wants the money, all right? So, let's just share that really quick. But the thing about the bankruptcy is because payment history is a reflection of how well you pay your bills and your accounts are already bad, if you're looking to file a bankruptcy to improve your credit, just think about this. Filing a bankruptcy to improve your credit, and a bankruptcy is the absolute worst derogatory that you can have in your credit report, why would you think that that's going to help you fix your credit? If anything, it's going to cause your credit score to drop even more, 50 to 100 points, based off of all of your accounts being included in your bankruptcy, one, and the bankruptcy being added to your credit report. And oftentimes one thing that I've noticed is a lot of people, they are misinformed when it comes to a bankruptcy. They'll be educated by their friends or family on, how bankruptcy can help their credit, when in actuality, it's going to hurt you more than it helps you, okay? And if you are someone where you're in a situation where you can't afford your debts, that's the only reason why you should contemplate filing bankruptcy. Now, of course, I am not a bankruptcy lawyer. This is basically just information based off of my personal experience in dealing with clients. However, if you are someone where you need to look into filing a bankruptcy, do not just take this video as justification. Make sure you consult with the bankruptcy lawyer as well, because they can further break it down on how the bankruptcy works. Okay, I'm just sharing information that's going to help you make a better decision when it comes to fixing your credit. Okay, just want to put that out there for disclaimer purposes. What you need to realize is the bankruptcy is going to remove your obligation to pay the debt, not remove the derogatory account from your credit report. Is that understandable? Let me get some feedback. Let me get, let me know that you're understanding this information. Either comment saying I understand, leave, a heart, a like button, whatever it is. Let me know that you're understanding that part alone. Okay? Does everyone understand that? All right, moving forward. When people are filing bankruptcies, one thing that they don't understand is there are restrictions to the bankruptcy. There's something called a means test. And what they want to understand when you file the bankruptcy, they want to make sure that you are filing it in a true representation of your finances, okay? And here's what I mean. To file for Chapter 7, there's a couple criteria that you must meet. One, your monthly income cannot be above the average income in your state, okay? So, for example, if your income is $3,000 a month, okay, and the state average income is $2,000, that criteria lets them know that you may not be able to file a bankruptcy, okay? So if your average income is above the state average income, and you can afford to pay $100 towards your debt, you cannot file Chapter 7 bankruptcy, okay? Basically, in order for you to file Chapter 7 bankruptcy, it has to be tight, okay? You have to be in the hole. You cannot be above water. You have to be underwater when it comes to your debt. So if you make, if your monthly income is above the average income in your state, and you can afford $100 towards your monthly payments of your debt, you cannot file a bankruptcy. And a lot of times, people, when I analyze credit reports, people will file a Chapter 7. And what ends up happening is, because that derogatory account has hit your credit report will drop significantly. But one thing that has stood out to me is, you filing the Chapter 7 and you're not approved for it, you basically wasted the derogatory, because it will show up as dismissed. How many people have a dismissed bankruptcy? Okay, there's two different kind of bankruptcies. Well, results of bankruptcies, excuse me. You'll either have a dismissed account or you'll have a discharged account, okay? A dismissed account means that you filed for it and one of two things happened. You canceled the bankruptcy or you didn't qualify for the bankruptcy. And I believe, this is just me going off my opinion, I believe that a lot of people are having dismissed bankruptcies because they don't qualify. So basically what ends up happening is, you feel like a bankruptcy is going to help you fix your credit. You file a bankruptcy, but come to find out, you make above the average income in your state, and you can afford $100 towards your monthly payments. So instead of the bankruptcy being just discharged, meaning that it actually went through, they dismiss it. But that derogatory account, the bankruptcy, is hurting your credit report. So you just wasted the bankruptcy. You just wasted that derogatory account. Your credit score just dropped 50 to 100 points because you didn't have all of the information, okay? So that's one thing that I've noticed. And, people will file a bankruptcy when actually, they actually are approved for a Chapter 13. So really quick, let me backtrack a little bit. Let's explain the differences of the bankruptcies. A Chapter 7 is basically your removal of your legal obligation to paying your debts, okay? That's what a Chapter 7 is. A Chapter 13 is basically your financial situation is so tight that they have to create a new payment plan for your debts, okay? And they basically categorize your debts from most priority to least priority, and they put you on a payment plan. And if you can afford to pay $100 a month and your income is above the average, then instead of you being able to file a Chapter 7, you have to file a Chapter 13, okay? And that's basically a payment plan for your debts. So what ends up happening is you're trying to remove your legal obligation to pay. You're trying to get it removed from your credit report, but instead they say, nope, you have to do a Chapter 13. So you end up putting yourself on a monthly payment plan when you were trying to get rid of the debt outright. And a lot of times, you're going to be on this plan for 5 years, right? Paying at least $100 a month, and your credit is going to be shot, okay? And the thing about filing a bankruptcy, if you're looking to buy a home, if you have that bankruptcy on your credit report, you won't be able to make a move in regards to buying a home for 2 years. So a lot of people are looking to file bankruptcies so they can end up making moves, and the bankruptcy will basically pause your potential on using your credit to buy a home, okay, for 2 years at least, 24 months. Now, there are special programs out there for people who have bankruptcies. However, the requirements of being approved for that is tight, and many of times a lot of people aren't qualified to do so, okay? But, just looking at, how bankruptcies work and what a lot of people use bankruptcies for when it comes to their credit, they're using the wrong strategy, okay? You filing a bankruptcy will not fix your credit. It will only remove your legal obligation of paying that debt, okay? So if you are someone where you are looking to make moves and, you were contemplating filing bankruptcy because you think it's going to improve your credit score, rethink that. You need a different strategy. You need to approach improving your credit a new way. And in order for you to fix your credit, what you have to do is leverage something called the Fair Credit Reporting Act, which is the consumer law, and basically use the criteria under that law to your advantage, okay? That's how you fix your credit. And also you focus on rebuilding as well. And as you do those two things together, your credit will continue to improve, and you'll be able to get approved for whatever moves that you're trying to make in the future, like buying a house, buying a new car, or just being prepared for whatever life may bring your way, okay? So if you were thinking about filing bankruptcy, I want you to rethink that, unless you cannot afford to pay your debts. If you cannot afford to pay your debts, definitely consult with the bankruptcy lawyer. But if you were someone who was contemplating filing bankruptcy to fix your credit, don't do it, all right? Because it won't fix your credit. It's a total waste of time, and it ends up hurting your credit more than it helps you, and will put you on the bench for 2 years because you were misinformed, okay? So really quick, I want to answer any questions. Does anyone have any questions in regards to bankruptcies and fixing your credit? Let me see. Northern Nutella Black Lives Matter on Instagram asked, how would you get it off if it wasn't discharged? Well, what you have to do is you have to leverage the Fair Credit Reporting Act, pinpoint inaccuracies, or verifiable information. You want to use that against them, okay? The thing is, sometimes you're not able to get bankruptcies removed off the credit report, because if they can actually provide factual proof, then it's going to stay in your credit report for up to 10 years, okay? That's why it's best to have the right strategy before you go into filing bankruptcy, because, you may end up shooting yourself in the foot, all right? But the reason I'm sharing this information is because, of course, I want to help you all make better decisions and get the information that you need to improve your credit. And we're offering many different programs. We have our credit repair service, a done-for-you service, where we actually do the work on your behalf to help you fix your credit through leveraging the Fair Credit Reporting Act, and also sharing with you how to rebuild your credit. And also, we are introducing our our Transcend Financial Academy for people who may not be able to afford our full service credit repair service, but they need a true understanding of how to fix the credit. And that academy is actually going to be instructed by me. We're offering our first course, how to remove derogatory information off your credit report and fix your credit. That's going to be introduced Sunday. It's going to be available for sale. The pricing is very affordable. Everything will be under $100, and we do offer installment plans for people who can't afford the down payment. But if you are someone where you want that information, just click the link associated to this video to get on our first to know list. And this Sunday, when it's available, I'll send you an email to let you know, and you can take advantage of our early bird special. Basically, the course will be on sale for the first 100 people. But make sure you click that link. I'm going to include that in Facebook really quick, and YouTube, and then on Instagram, click link in bio. Okay, click the link in my bio for that information. Get on our first to know list so that you can get a true understanding of how to fix your credit, and get that information from me directly. There's a lot of misinformation on the internet, and I want to make sure that you all get the right information that you need, and a true understanding and a true strategy to fix your credit. Let me see here. We have a question by Robert Woods. My report went down due to non-payment for me losing my job. My score went down 150 points. What can I do? Well, oftentimes creditors are understandable, and if you share with them about the loss of your job, they may be able to look out for you. You may have to seek goodwill. Definitely, I would give them a phone call to let them know what's going on. And some creditors, they'll look out for you by pushing your payments, the past due payments, to the back end of your loan to help you out, okay? So I would definitely look into that, Robert, so that you can get help with that. But, definitely, try to get that goodwill out of your creditor. Or, you may have to try to come up with a payment plan to get caught up on that account as well. But you have to at least reach out to them to give them an opportunity to help you. There are some honest companies and companies with integrity that actually care about their consumers. So I would definitely recommend that. But, outside of that, it may take you making some changes with your finances, getting back on your feet, and, working out a plan with your own financial plan to fix that. And sometimes, you can't fix it overnight. Sometimes it's going to take, 6 months to a year for you to get back where you want to be. And that just means that you have to delay some things. But the good thing about the world we live in, if we give our situations enough time, great things can happen. Okay, so just be patient with the process. Understand that you gotta delay some things, and work the process. Okay, so if you are someone who is interested in being instructed by me in our Transcend Financial Academy and learning how to fix your credit and remove derogatory information off your credit report, click the link associated to this video to get on our first to know list. And this Sunday, I'm going to send you information that will allow you to get a true understanding of what the Transcend Financial Academy is all about, how you can get started, so that you can learn how to remove derogatory information off your credit report. That's going to be the first course that's introduced. Do I have any more questions before I let you all go? And if you do have any questions and you missed the live session, feel free to send me a message or comment on this video anyway. And at my earliest convenience, I will try my best to get you an answer that's going to be helpful. But at the end of the day, I want to thank you all for your time and allowing me to share some of the information that I'm very fond of, and also have a real good understanding of. I'm truly grateful for that. And, at every point that I, go live and talk to you all, I'm going to do my best to let you all know what I know, okay? But at the end of the day, I want to thank you all. Again, my name is Jason White, CEO and founder of Witness Riches. You all have a wonderful evening. I'm out. Peace.